Hello, hello, and welcome back to the podcast. Thank you very much for being here. If you are a first timer, thank you for being here. I always say welcome back as if you guys have been here forever. A lot of you have, and I appreciate it. Today, we are going to talk about the myths versus the realities of whole life insurance. And I have been seeing so much misinformation, and so I want to just clarify it in a very simple format. And I'm hoping that this helps most of you with that. So this is again going to be on both podcasts that I have, both Without the Bank and Farming Without the Bank. So if you have not, I'm just going to throw this in there right away. If you have not gotten the books yet, please do that. Go to withoutthebank.com or farmingwithoutthebank.com and you can get Life Without the Bank, Farming Without the Bank. You can get Nelson's Become Your Own Banker. I highly suggest getting the bundle of one of mine and his, because the concept is just that, a concept. There is so much misinformation that it is important to get Nelson's book, in my opinion. It is important to know exactly what we're teaching and not some arbitrage BS of what everybody else is teaching out there. If Nelson wanted to arbitrage, he could have done that while he was alive. But there's obviously a reason why he did not want to do that. And a lot of it was just that he was very conservative. And getting stuck in the 80s with, 23% interest on $500,000 of debt puts you into a conservative state. We've had 10 years of really, really good interest rates and everything being propped up and people thinking that it's going to last forever. And that is not the case. And we are seeing things that are not, policies that are not following through. And so let's talk about these myths versus reality. And I am talking about whole life. Let me preface this. I am talking about whole life, not indexed, not universal, not variable, universal. Whole life only with a dividend, with a company that pays dividends, okay? Mutual company. Number one is people think it is too expensive. Now, I outline this in my Farming Without the Bank book. I honestly can't tell you if I do it in Life Without the Bank, but I believe it's in there as well. That I have done the calculations on whole life versus term premium. And in order to get apples to somewhat apples, right, we are going to have to take term out as far as it will go. Now, term will only cover to 85 years old. Unless they've extended that, I honestly don't know. I don't sell a lot of term. But if we calculate premium on term to 85 and we calculate whole life to 85, guess what is more expensive out of pocket? Term insurance. Because you can't buy term insurance from age 20 to 85. You can't do that. So every time your term runs out, you have to buy more term insurance and you are older. So it gets to be more expensive. We have to calculate that. Now there's another myth that you're not going to need life insurance over 65. Most people today have debt over 65 years old. They have a house. There's even statistics that show that a lot of people over 65 have student loan debt because they co-signed for a child. And so they still have the student loan debt that needs to get paid off if the kid's not paying it, right? They might be buying cars. There are still expenses like a funeral that needs to get paid when you die. Where is that going to come from? And so we still need money over 65, and we are still most likely going to have debt over 65. So this myth that, you only need term to 65 is a bunch of crap. That myth was created when people were dying sooner, right? When we didn't have all this debt because we weren't spending money like it was water. Low interest rates did nothing except create debt for people because you were stupid not to buy it. It was so cheap you couldn't afford not to buy it. So now we are carrying all this debt. This is such a misnomer that term is going to be better than whole life. That is cheaper than whole life, that you're not going to need the death benefit. Complete total myth. Think about this. Think about the long-term portion of this. I heard somebody say the other day that it won't pay the death claim. Whole life insurance, they try not to pay the death claim. I mean, I have not heard that. Honestly, I have not heard that until I got into the industry. That's what life insurance is for. That's like saying your term insurance policies aren't going to pay. So what is the difference if a life insurance company sells term insurance and whole life? Every single company sells term insurance. Every company sells term insurance, but not every company sells whole life. Okay, but let's just say we have a company that sells term and whole life. Why would they choose to not pay a whole life claim over a term claim? Somebody died. That's the business that they're in. So when we hear that, oh, the company didn't pay that, why didn't they pay that? There are reasons a company is not going to pay a death claim, just like there are reasons why your homeowner's insurance isn't going to pay a claim or your auto insurance isn't going to pay a claim. 100%. A, did you lie on the application? Did you commit suicide? Were you murdered? Okay, those things are going to make a difference. Did you lie and say, oh, I'm non-tobacco, but I'm actually a tobacco user? They're not going to pay the claim as non-tobacco because you lied on the application. They're going to go back and look at that if it's within the first 2 years. A company will reserve the right to do that. Think about this as well. Let's say that you own a business and somebody says, you know what, I'm going to buy something from you, but then I'm going to return it because I just, I didn't like it. It didn't work, but it did work. So now you have to give them a return and you can't sell that product again. Happens to me all the time. People will email and say, well, Mary Jo, I want to get money back for the book because I didn't like it. Well, that's too bad. I'm sorry you didn't like the book, but I don't do refunds, right? Or people will lie and say, oh, I didn't get it. Yes, you did. We tracked it. You have it. No, I'm not returning it because you decided not to read the website before you purchased it. That is not my problem, right? So as a business owner, we have those same things that the life insurance companies have. But this myth that they won't pay death claims or, oh, they weren't paying during COVID. Yes, I had 2 clients that passed away from COVID. Those claims got paid without question. Yes, they're getting paid. I don't know a company that hasn't paid them. I have colleagues and friends all over selling life insurance and have only heard of one story that they did not pay the claim. And that was because the person died of an overdose and lied on the application and said they were not a drug user. And they were a drug user. The insurance company is not going to pay that claim, but they are going to give the premium back. Why? They're not going to keep the premium and not pay the claim. So complete myth, just people talking and most people taking it as gospel instead of actually asking. Okay. I have a new client who was talking to another agent from another company. This agent said, oh yes, I heard that this Mary Jo, the company Mary Jo uses, doesn't pay claims. What? They pay all my claims, no problem. I've never heard for them not to pay a claim. In fact, I've heard they've paid a claim when they don't have to pay a claim. So instead of talking out of your you-know-what, maybe do a little bit of research. How about that? Like, this is, when we start to hear this stuff, it's because insurance agents, most likely, are trying to get you to come their way to buy business. I'm not going to lie to somebody to get their business. That's absolutely asinine. And so we have created some of this ourselves. All right. It's not a good enough rate of return. I've said this before. Let me say this again. Life insurance is not an investment. It's not about a rate of return. It is life insurance. They are allowing us to use the cash value while we're alive because that's how the contract is written and that's how it works. This is not about a rate of return. I just had a financial advisor get mad at my post on Facebook because he cannot believe that all these people are fallen for the infinite banking concept and buying life insurance. Is he worried about losing business? Not everybody is going to buy life insurance, and not everybody is going to see the value of it, just like not everybody's going to see the value of the stock market and the rates of return and not being able to access money and not having it liquid. Okay? It's not a rate of return. This is a huge myth that, they don't have good enough rates of return. There is a guaranteed rate of return in our policies. Guaranteed. Not IUL, not VUL, not indexed. Okay? Whole life, there's a guarantee. If you're chasing rates of return, you have the wrong product, my friend. Go get an IRA. Borrow money from cash value to put money in an IRA. I don't care. But that has nothing to do with whole life because it is life insurance. It's not an investment. Okay? I heard this one the other day as well. The agents make too much commission. What is the difference? I actually make more commission selling term insurance than I do selling whole life. Think about that. I talked to somebody just yesterday and their relative sells whole life insurance or sells life insurance. I don't know what kind, sells life insurance. And their relative said, why would anybody sell this and take a commission hit the way they're doing it? Nobody would do that. Yes, there's all kinds of us doing that, taking a commission hit. So why wouldn't I just sell a whole bunch more term insurance and make more? I wouldn't even have to sell as much term insurance to make more commission. So the commission is not the point. Do you say, well, I'm not going to buy that car because that person made too much commission. I'm not going to buy that bed because that person made too much commission. I'm not going to go see my stylist and have extensions put in and a hair color done because she makes too much money. No. What happens when you go to a store or you go to a restaurant? Do you say, you know what, I'm not going to tip because I feel like she makes too much money already? People, we all get paid for what we do. Even a financial advisor, I don't care how much money they make. It does not matter to me because we all get paid. I get to decide if I want to use them or not, but commission is part of what I get paid to know what I do so that I can help you and I can do it correctly. If you want to go to somebody that doesn't, then go ahead and do that. But there's this misconception that we are making so much money. I had a gentleman say to me one time, well, I wish I was an agent. I could make more money than I can farming. I said, then why don't you go get your license and sell life insurance? Well, it's that simple. Think about it. You're an HVAC guy. Well, I wish I had that business. Look at all the money they're making. Any business, farmers. When they have a good year, right? Oh, I wish I was a farmer. Look at all the money they're making. Then go do it. Shut up and go do it. It's really that simple. It's that simple. If you think somebody making more money than you is bad, then shush, just zip it and go do what they're doing. Life insurance is bad because the policy collapses before I die. My dad had a policy and we got a letter and we had to pay more money to keep that policy alive. Or my dad died without having life insurance and he paid in for all those years. Yes, my friends, that is variable universal life, that is universal life, and it is indexed universal life. It is not whole life. There is a difference. And those are kind of the big ones. I'm looking at my list. Those are kind of the big ones that I hear a lot about. And it is typically from people that have never read the book, financial advisors, or you're mostly financial advisors, and or people old enough that have no idea. Buy term and invest the difference, because that's what we've heard. Okay? Think about who your source is. Also, I've said this before. If you've read my book, if you've read Nelson's book, if you've done any research on the infinite banking concept, you are almost an expert compared to the neighbor guy or the family member who knows nothing about it. And so when they are giving you negative feedback, how do you think that you can even take them seriously when they don't know anything about it? You know, early on, when I would tell people about this, I would get these same objections. And those objections, I learned very quickly, are coming from people that are doing nothing but regurgitating what they have heard from somebody else. That's not a legit reason. Explain to me why. Show me why. Right? I can sit here all day long and say, oh, universal is bad, variable is bad, indexed is bad. Show me why. I can show you why. I've seen it. Now, there are some universal, in 13 years, I've seen two good universal life policies. So there are some that are decent out there, but the majority of them are going to be bad. So I am not going to sit here and say, oh, that's terrible, and not have anything to back that up. So when you're talking to people and you're getting feedback from people, make sure that that is somebody that knows what they're talking about, and ask them to show you that. If you're going to tell me a life insurance company hasn't paid a claim, please give me an example of that. Show me who that was and tell me why they did not pay that claim. Did they have justified reason not to? Or did you just hear they didn't pay a claim? You just can't go around believing everything somebody says. Not in today's day and age. Not with all the noise that we have out there. If life insurance was so terrible, why would it be around for 200 years, and why do the banks own it? Why do wealthy people own it if it's so bad? Doesn't make any sense to me. There's a lot of wealthy people that don't have their money in the stock market, and they have their money in whole life or real estate or something of the sort, but our financial advisors think we all should have money in the market. Why? That doesn't make any sense. So just don't take everything at face value. If there is another myth that you want busted, you let me know. Email me and I am happy to answer it, happy to do a podcast on it, whatever, if it warrants a podcast. You know how to get a hold of me. MaryJo@withoutthebank.com. Email me. Go to withoutthebank.com or Farming Without the Bank. Grab the book, and thank you for being here. I appreciate it. Have a good rest of your day.